Du is the country's second largest telecom operator, launched in 2007, and plays a central role in Dubai's digital transformation across mobile, fixed, ICT, cloud, data centers, and fintech. For investors, Du offers exposure to one of the most defensively positioned businesses on the Dubai financial market. So, is Du a stock worth tracking? Let's break it down. Du is the trading name of Emirates Integrated Telecommunications Company (PGSA), listed on the Dubai financial market under the ticker symbol DU. Its ownership structure is anchored by strategic government shareholders. The Emirates Investment Authority, the UAE's Federal Sovereign Wealth Fund, holds approximately 50.1%, and DH8 LLC, a subsidiary of Dubai Holding, holds around 19.7%. In September 2025, Mamora Diversified Global Holding, a Mubadala subsidiary, completed a secondary public offering of 342 million shares, 7.55% of DU, at 9.20 dirhams per share, raising 3.15 billion dirhams. This increased DU's free float meaningfully, improved trading liquidity, and opened a pathway toward potential inclusion in international indices. The business is structured around three revenue streams: mobile services, fixed services, and other revenues, which include ICT, wholesale, cloud, data centers, and handsets. Now let's look at the numbers. According to DU's official FY 2025 results, full year revenue reached 15.9 billion dirhams, an increase of 8.7% year on year, exceeding the company's guidance range. Net profit climbed 16.8% to a record 2.9 billion dirhams. EBITDA rose 13.4% to 7.3 billion dirhams, with the EBITDA margin expanding by 1.9 percentage points to 46.1%. Operating free cash flow rose 14.4% to 5.1 billion dirhams. The mobile subscriber base grew 8.8% year on year to 9.7 million, with postpaid customers, the higher value segment, up nearly 10% to 2 million. Fixed subscribers grew to 735,000. For dividend-focused investors, this is where DU really stands out. The board recommended a total dividend of 64 fils per share for 2025, an 18.5% increase year on year, representing a payout ratio of nearly 100% and the highest dividend in the company's history. Dividends have been uninterrupted since 2012, and per-share distributions have grown from 24 fils in 2022 to 64 fils in 2025, a compound annual growth rate of around 40%. The first quarter of 2026 continued this momentum. According to DU's official Q1 2026 results announcement, revenue grew 6.9% on year to 4.1 billion dirhams. Net profit rose to 15.5% to 834 million dirhams. EBITDA increased 11.1% to 2 billion dirhams with a record EBITDA margin of 49.5%. Operating free cash flow reached 1.7 billion dirhams, up 14%. The balance sheet remains unleveraged, and in April 2026, DU successfully refinanced an 2 billion dirham revolving credit facility at improved terms with a 7-year tenor. Management reaffirmed its full year 2026 guidance despite the impact of regional geopolitical developments in March, which weighed temporarily on roaming revenues. There are also two strategic developments worth tracking. First, DU has partnered with Microsoft to develop a hyperscale data center, a major diversification play into cloud and AI infrastructure. Second, DU is scaling its fintech business, DuPay, and its ICT arm, DuTech, both of which are increasingly meaningful contributors to non-connectivity revenue. From an investor's perspective, there are 5 things to monitor closely. First, mobile subscriber growth and the shift towards higher value postpaid customers. Second, EBITDA margin, currently at a record 49.5%, and whether it can be sustained as data center investments ramp up capital expenditure. Third, execution of the Microsoft data center partnership and monetization of cloud, AI, and ICT services. Fourth, dividend sustainability. With payout ratios already near 100%, growth beyond this level depends fully on profit growth. And fifth, whether the increased free float post Mamora offering leads to inclusion in global indices, which would attract passive fund flows. DU is not a diversified global technology group like EAN. It is a focused, UAE-centric telecom operator with a strong home market, an unleveraged balance sheet, and one of the most attractive dividend profiles on the DFM. So is DU a stock worth tracking? Absolutely yes. The company has delivered record revenue, record profit, a record EBITDA margin, and its highest ever dividend, all while remaining debt-free and investing in future growth. But investors should continue to monitor competition from EAN, margin sustainability, the pace of data center investment, and valuation carefully. A record year is not automatically a buy at every price. This video is for educational and information purposes only. It is not investment advice or a recommendation to buy, sell, or hold any security. Please conduct your own research or consult a licensed financial advisor before making investment decisions.